I've just recorded a video covering gold, silver and oil, so please do have a look at that if you've not seen it already. I'm now looking at the Forex markets. I'll be honest with you, the Forex markets, I don't think they've ever been so difficult. If you're struggling to trade the Forex markets, I'm not surprised, I am, and I'll show you why. The dollar has been in a bear trend, and then we had a small recovery up to the moving averages, and then we started to trickle lower. Spending long periods of time trading sideways in very confusing patterns. This up one day, down the next is tricky. I didn't understand why this recovery happened. Then we started to get some momentum to the downside, 3 red candles. But of course, on Friday, as I talked about in my gold and silver video, we had the Fed and ECB reminding the market that interest rates are going to go higher for longer to fight inflation, a big recovery in the US dollar. A bullish engulfing candle. This is important. Bullish engulfing candles are something that I really do pay attention to because it's a bear trap. You've got the sellers on Thursday who are now all underwater, those who didn't get out or didn't use a stop loss, for example. I don't know for sure whether this means we're going to see maybe a 2-3 day recovery. We could do, or it may just indicate that we're going to trade sideways for a while. But the market's caught between believing that the Fed is going to be forced to cut rates because inflation is going to come down quickly. The market still wonders whether the banking crisis will lead to a credit crunch, which means that the Fed will cut interest rates to counteract that. Interest rates really are being pushed and pulled in 2 directions. I can't really believe that the financial markets were predicting interest rate cuts for the second half of this year in the US. So trying to decipher these patterns has been tricky. Euro versus the US dollar is a mirror image of the dollar index, which is normal because the euro is the largest weighted currency in the US dollar index. Look how nicely it bounced off the 100-day moving average. We've got a bullish crossover on the daily chart where the 100 crossed above the 200. So it does indicate that the euro is in a bull trend against the US dollar. And of course, we've got moving average crossovers. We've got the price crossing over above the moving averages as well. The black 50-day moving average acting as a good support level once we broke above it. I put some trend lines in there as well. The green 500-day moving average was resistance at first, held twice. Nice big green candle break above it. So it's doing what it should do in a bull trend. So of course, I'm suggesting that we need to be in long positions. This trend line joining the 2 peaks which were held by the 500-day moving average gives a support level around the 500-day moving average, and we dipped down to my buy level at 109.70, 109.50 on Friday, just holding above there for a small recovery by the close. This isn't quite a bearish engulfing candle because it's got a small red body, so I'm going to stick with the bulls. I think this still looks quite positive. It's just a retest of a support level, and I think that the euro should go higher against the US dollar. The risk reward of being long is pretty small because you could have somewhere between a 20 and 40 pip stop loss. And if we do go, we should be looking at hundreds of pips potential profit on this. Now, the euro US dollar is quite a clear bull trend, but you've got a lot of markets like the Aussie dollar, which are just a mess. You know, the moving averages are all going in different directions. Because the market is trading sideways, the moving averages tend to flatline over a long period of time, and they tend to converge to the same price. We rock it up. You think, great, big green candle, here we go, we're starting a trend. We did actually hit my sell level, to be fair, so I'm happy about that. And there was a potential 100 pip profit on that sell level. I chose it purely because of the trend line, the Fibonacci level, and the 100-day moving average, and it did work. Then you've got the New Zealand dollar, which is a complete and utter mess, just going sideways. It's almost up one day, down the next, holding between the 100-day moving average and the 200-day moving average. So I'm going to wait for a breakout of those levels. Again, Thursday, really strong move to the upside and then a complete collapse. So you can't run a trade for long. Dollar yen, if you're a swing trader, forget about it. This is not a market for you. You've really got to sit back. Just trade the trend lines, for example, that I've got on my chart. Trade the range. You've got to be really patient because when we're in the middle of the range, I don't think there's anything that you can do there. We're testing the upper end of the recent range going back to the middle of March. Euro yen last week, I decided to go with the breakout of this trend line. And that does seem to be working. So I'm going to stick with the strategy of being long the euro versus the yen for a little while longer. Yet another Forex pair stuck in a long-term sideways trend. Well, 4 or 5 months is long-term when you're a day trader, isn't it? Canadian dollar versus Japanese yen is bouncing back to the 38.2% fib at 128. And then we've got a little trend line here from the previous peaks indicating the upper end of the range at around 156. So it's a question of, do we reverse and turn down from the resistance area, or do we break up like the euro yen did for a potential buy signal? This one worked really well on Friday, the euro versus the New Zealand dollar, clearly in a bull trend since December. So I stuck with that and went for a buy at the support level, quite easy to identify. I talked about how I put a secondary set of fib levels, and I will do a video on Fibonacci levels because I've been asked many, many times. I put a secondary set of fib levels around the 61.8. That worked really well at 175.11, coupled with the trend line and, well, swing highs and swing lows. So we had a real good 200 pip bounce from the support level. I don't suppose you managed to run it for 200 pips, but if you did manage to get 100, 150, that was a phenomenal trade. There are a lot of really messy, horrible Forex pairs out there, and I go through dozens of Forex pairs trying to find opportunities. Most of them are just horrible, sideways, volatile, erratic trends at the moment, which I can't personally trade. We should have some good support around the 164, 65 area in the British pound versus the Canadian dollar. But this one threw me on Friday, the pound versus the dollar. I've been looking for a breakup and I've been fooled twice on this now. I thought this was a breakup here, nice green candle beating the previous highs, and then we just dipped a bit. Then I thought we were going for it now. On Friday, we did push up higher. And as you can see, the peak of this candle was enough above the trend line for me to get long. But now we've got this bearish engulfing candle in cable. I'm hoping that this trend line holds it and we bounce off there and then eventually we break up again. But it's too tricky for me to call right now in cable. Okay, I hope that's helpful. Have a look at my website, daytradeideas.co.uk. If you're not a subscriber, have a look at what I have to offer. If you like my analysis and you want to follow my daily signals and my cheat sheet of trade ideas, or if you want to have a chat with me, you can go to my free mental session and book yourself 15 minutes with me and we can have a chat about your trading. Okay, thanks a lot.